What is happening, guys? Welcome to another fantastic This Week in Crypto episode. We are going to be going over many things here. For those of you who are new to our show, what we do here on our Santiment hour of displaying our metrics is essentially go over everything that we possibly can that are charts and metrics and data and price leading analysis has been showing over the past week for where the markets stand in cryptocurrency. We will also be discussing several of the various altcoins that have been taking off. Bitcoin, Ethereum typically are our focus, but by all means, in the YouTube chat, if you'd like to drop a few suggestions for assets that we can take a look at toward the end of the call, we'll spend about the last 20 to 25 minutes doing that, and going between 3 to 5 minutes, showing as much as we can on each one to give you guys some insight on what our metrics are looking like for those particular coins. What we're looking at right now, and actually before I go into this, I, as always, want to make the disclaimer that what we're doing here is not investment advice by any means. Our goal here on the show is to give an idea of what our metrics are looking like from an objective database standpoint, and not by any means here to try to manipulate what you do, what the markets are doing, or anything of that matter. Our goal here is to be as objective as possible. So keep that in mind and know that we are never giving any suggestions for you to buy or sell anything in cryptocurrency. That being said, what we're looking at right now is the 1 week percent change screener. You'll notice we have an outlier here. This unfortunately is a bug, guys. So we're going to get this ironed out very soon. We apologize for having it sort of skew the axis, but all the numbers you see down here are correct. So I'll try to work around it the best I can here. Over the past week, Bitcoin was able to jump about 14-15% or so, and it reached above 57,000 for the first time in about a little over 2 weeks. And it's currently sitting between 56 and 57 at the time of this call here. On top of that, Ethereum was about in line with it, jumping about 15% itself. Binance Coin, which is now the third market cap. I still am getting used to the fact that it's third market cap with XRP being there for such a long time. It had a great 13 to 14% week in line with Bitcoin, Ethereum. And then we sort of saw a little bit of flatness here out to round off the top 10, followed by some pretty big returns. And I wish the bars could really show, but I'm just showing based on the numbers here. You can tell with me that, we had coins like Theta, Luna, Crypto.com, and VeChain to a smaller extent. And we had a few huge ones, as Dino covered in a few insights. Chili's did really well. He actually discussed it on last week's This Week in Crypto call, and it's continued to just absolutely surge over the past week.
Most NFT related coins are just going berserk. So Chili's, Engine, Decentralized, we wrote about all three of them in the last week. So if you're interested in basically why, number one, NFTs are pumping, NFT related ERC20 coins, right? And number two, we try to kind of figure out where they might peak. And so far, I think, my decentralized insight was pretty much on point. So if you go back a few days on insights.santiment.net, and I think Gary can share it in chat, we wrote about decentralized right around the top, saying there's a lot of different yellow flags starting to appear in Mana's on-chain and social activity. So if you want to learn about, how we read the market in this particular case, which I think can be kind of translated to pretty much any asset, check out the article. I think it's aged pretty well so far. Mana is obviously starting to pump once again in the last 24 hours, but it had sort of a 10% correction as we were talking about it. So for those interested in NFTs, I think it's a pretty good read.
Yeah, and we can try to go over a few NFTs here on the call if we have time or if you guys request them. But obviously, they're going to be more volatile than most because of the fact that they have been rapidly gaining at such a fast rate. But they're going to be worth looking into, and definitely, not all are created equal. Chili's has been surging much more than Mana and Engine, for example, but all three have shown a propensity to really rapidly rise with this NFT craze right now. So it'll be interesting. So yeah, besides the fact that NFTs are rising, there's still plenty of other assets here that have been getting quite a bit of traction. MATIC has doubled in price. Zilliqa, HBAR, Zcash tiny bit, Swissborg a tiny bit. Most of these are a little more on the flatter end, but in general, it looks like most altcoins, at least in the top 100, have been kind of gaining on Bitcoin once again. Plenty have dropped, obviously, with Bitcoin being up 15%, and a lot of these being in the red. It's a mixed bag, but for, especially these sort of mid, ranked 40 to about 70 market cap altcoins, they're the ones that really pushed higher this week. And you'll see a lot of times, depending on the market cap rank, whether it's a large cap, mid cap, or a small cap, they do tend to bundle together a little bit regardless of the type of token they're in. And that was kind of the case with the middle range of this top 100 over the past week. All right. So we're also going to be talking a little bit about weighted social sentiment here, guys. I put out an article 2 days ago about the weighted social sentiment, which made its return onto our platform over the past week. And it's a really, really fantastic metric, guys. If you have Sanbase Pro, I would definitely recommend checking it out. If you don't yet have it, this is probably one of our top 5 metrics that really snapshots where we stand in the markets currently in terms of how they're being perceived, whether it be Bitcoin, Ethereum. I also talked about XRP a little bit, Chainlink, Polkadot, Cardano, just a few of the top projects in crypto. But we actually have this metric available for over 1,000 projects. So if you head on over to graphs.sentiment.net/social, you'll be able to see what I'm seeing here. The weighted social sentiment chart is all the way at the bottom, but we also have plenty of other charts, such as this one, which I really like, which shows the positive versus negative sentiment over time. But for the purposes of our time today, I'm just going to go over what the weighted social sentiment is looking like, and also, of course, what it means for those unfamiliar. This is essentially measuring the sentiment balance, which is the positive versus negative ratio of commentary over time. In this case, for Twitter, which I highlight because of the fact that Twitter tends to have the most expansive, largest sample size of commentary. And quite frankly, they often are the closest we can get to really getting into the center of the minds of crypto traders, right? Obviously, Reddit, Telegram, Discord, they all have great minds there as well. But Twitter is more of kind of a reflection of the mainstream mind. So most of the time when we do our analysis, we're going to be focusing around Twitter as we are here today. What we're looking at right now is basically a dip into negative territory for the first time since October. The dip kind of started right around the beginning of March. So we're at about the 10-day, almost, I'd call it about the 2-week mark. I take that back. 2 weeks or so we've been into the negative, and we're still quite negative in respect to where we have been over the last 4 to 5 months. What this essentially means is that there's a lot of doubters, right? There are a lot of people that don't quite believe in this rally. Obviously, we've come up to our all-time high about 3 weeks ago of a little over 58K, dropped down below 45 at one point before eventually making this big bounce back to 56, 57K. And based on what this chart is telling us, a lot of people just do not believe that we're going to breach that all-time high once again, especially being in the negative 0.6 range down here. That essentially means that the standard deviation compared to the norm is not quite at -1, which would say that we're essentially about half. I don't know the exact number, but it means that we're largely negative compared to usual. And these extremes here are really what you want to look at. And I would call this an extreme, guys. If we're below negative 0.5 or so, that's generally a sign that we're way, way more negative than usual. And these typically if you look at these charts, they typically align with some of the market bottoms, maybe not precisely, but you look at these extremes here, and very soon after they hit these low marks where a lot of people are doubting, that's when we get inevitable rises thereafter, right? And vice versa, if you see something like this, may not always be the case, but oftentimes you'll see some flatness or just a gradual decline, like we saw here, like we saw here, and then like we did not see here at all, right? Because this is not just an end all be all metric, but more often than not, you want to see the weighted sentiment more in the negative than in the positive. And that's where we are now, long story short.
Yeah, but even like if you look at the last couple of months, right? It really needed, Bitcoin needed to go into that negative territory before we were able, first of all, to break 20K, and then second of all, finally to break the 40K mark as well. So both of those times we actually had to take like a short vacation into the negative territory where most people were doubting the coin's future performance before we were able to bounce back. And we've done a back test on this 2 weeks ago. You can check it out on insights.sentiment.net. And Gary, you can share the link to the article in the description of the video for people that are interested, where we backtested the impact of crowd sentiment on the price performance of over 3,000 coins. And the conclusion was that it seems like the average price performance of these coins tends to rise in the couple of days before they hit peak bullish sentiment. And then over the next 20 days, so this is on a sample size of over 3,000 coins, over the next 20 days, the price of these coins, the average price of these coins drops by around 5%. So it seems like, these peak bullish sentiment markers are usually indicators that we are way too overvalued. The crowd is, number one, hyper aware of the rally. And number two, pretty much everybody that wanted to buy in is already in. So there's going to be sort of a cascading decline in buy side pressure. And that's why you don't really want to see these massive spikes in bullish sentiment, right? On the other hand, bearish sentiment had completely different results in our backtest. So when coins hit peak bearish sentiment, there tends to be a gradual but definitely a solid increase in their price performance over the next 20 days. So currently we are still in a bearish sentiment sort of phase for Bitcoin, which is exactly, I think, one of the reasons why we were able to once again push to almost all-time high. Now, Brian, you're showing a very sort of smoothed out version of the chart. So if you smooth, if you take that slider and smooth it, maybe not all the way to the bottom, but maybe 2 or 3. There we go. So you are going to see that the average sentiment towards Bitcoin has been starting to rise once again in the last couple of days as the price of Bitcoin started to, get close to all-time high and potentially enter price discovery. So we are now seeing, as expected, people start to get a little bit more positive, a little bit more optimistic about the future price of Bitcoin. However, we are still very much confidently into the negative or bearish territory on average. So on average, on Twitter, which is what our machine learning algorithm was trained for on, so Twitter data is usually the most reliable. On Twitter, the average sentiment is bearish, and usually bearish sentiment indicates that there is more potential room to grow. Obviously, past performance doesn't indicate necessarily what the future is going to bring, but this is what we have seen for Bitcoin and Ethereum in the past. So keep an eye on this chart. I'm sure that if Bitcoin ends up breaking an all-time high, we are going to see a massive spike in bullish sentiment in the next couple of days. We're going to probably see a massive spike in derivatives funding rate as well. So once that happens, we are going to go back into that sort of overvalued territory. For now, according to our social data, Bitcoin is nowhere near overvalued. It's actually still kind of undervalued at the moment, which, not the only signal that you should look at, but definitely a positive overall.
Yeah, it's interesting to see that an asset that's on the brink of breaking its recent all-time high is looking undervalued based on sentiment here, but that's exactly what this picture is painting. So it's going to be quite interesting to see whether we're reporting on another all-time high next week, or whether we end up surging into the positives right before that all-time high is breached and a lot of people get faked out. It's always interesting, and I love looking at this chart. And Dino mentioned Ethereum. I've got that open as well. So we'll take just a very brief look at that to compare what's going on there. And it's remarkably similar to what's happening with Bitcoin. It's mostly in the negative, not quite as extreme. It's not on the negative 0.5 and below territory, but we've been sitting at an area that is just below neutral for basically the last almost 3 weeks here. And that's essentially telling us that people aren't believing that we're going to return back to above 2000 anytime soon, which, as we know, increases the chance of us actually returning above 2000. So just remember, guys, you can look it up for over 1,000 assets here, and they're all quite interesting. The lower the market cap, the more there's going to be a lot of variability in these numbers here. But check it out nonetheless with this URL, graphs.sentiment.net/social. Moving on. Let's take a look at whales here. Let's see if I can full screen it. So what we're looking at right now are 5 different groups of address sizes to show just how many addresses there are in that particular tier. Beginning with the light tan here, this one that is climbing up. This is the smallest tier of basically the smallest all the way up to 0.1 Bitcoin held in addresses. And basically all the time you'll see this line go up because there's always new addresses being created, and they automatically tend to be in this small category. Not always, but most of the time. Beyond that is our pink line, which is showing 0.1 to 10. So this is actually, in my opinion, what a lot of the smaller traders, the ones who are first starting to take it seriously, this is the category that they fall in. It's been rising pretty largely over the past 3 months, as we're showing here. But then take a look at the 10 to 1,000 tier, the red tier, and they've been basically just sliding down over the last 3 months, as we've shown on previous calls. But over the last 2 to 3 weeks, they've kind of flattened out, and they're not really dropping the way they were before. We were at 146,000 back on February 24th. We still are at 146.1K versus 146.3K. So really not much of a slide there. The gold one is the one I really like to look at to show what whales are doing. And obviously there's some difference in what the 1,000 to 10,000 are versus like 10,000 to infinity, right? So in this case, I've actually separated 1,000 to 10,000 here in gold. And then the brown, which is a little light, hopefully you guys can see it on your screens, that's the 10,000 to 100,000 range. And right now, both are dropping down a little bit, especially the 1,000 to 10,000 right now. It doesn't mean the rally is going to stop or we're not going to breach a new all-time high, but it means that the addresses with a lot at stake do believe that we are getting near another local top. So we should be aware of that and be mindful of the fact that whales are behaving this way. And I wanted to transition over to Dino here to expand a little more about whales, because I know he had some things to share.
Sure. So let me share my screen really quickly. 1 sec. I just wanted to tell people about the webinar that we are planning for next week, which is going to be on this exact topic. So 1 sec while I share my screen. So next Friday, guys, the link is in the description of this video as well, but I also wanted to put it up on my screen. So share screen. Let me know, Brian, if you can see my screen.
Yep, showing up.
All right, cool. There we go. Okay, so next Friday, sorry guys, next Wednesday, Friday is going to be our weekly stream. Next Wednesday, if you are interested in whale behavior and the behavior of large addresses and how that behavior on-chain can impact the price, not just of Bitcoin, but a variety of different altcoins, including Ethereum and top caps, as well as mid-cap coins, we are going to be having a one-time webinar on this exact topic next Wednesday at 6 p.m. Central Eastern Time, 5 p.m. UTC. So the topic of the video is going to be how to monitor whale behavior with Sanbase and Sanbase metrics. The reasons why you should attend are as follows, as you can see it here. So we're going to cover several topics. We're going to show you guys how you can analyze the behavior and the activity of large addresses. So one of the obvious ways is by using our holder distribution metric, but that's really the tip of the iceberg. We are also going to show you how you can find exact addresses that might be impacting the price of the coin negatively or positively, and how you can monitor them in real time, set up alerts for them, and react to their future moves, right? And that's going to be several of the topics that we are going to cover in this webinar. So if you're interested in learning more about whales, in learning more about how their on-chain activity can affect the price of the coin, of the coin that you're interested in, check out this page. The link is in the description of this video. This webinar is exclusively available to Sanbase Pro subscribers. So if you don't already have a Sanbase account, go set it up right now to app.santiment.net, and you are immediately going to be enrolled into a 2-week free trial. So you will be eligible to join this webinar. It's going to be a private webinar. So if you're interested in, just go set up your Sanbase Pro account and enter an email address on this website right here, so that you can book your seat, and we'll let you know. We'll share the link to the webinar in your email about 30 minutes beforehand. So that's one thing that I wanted to show. Another thing that I wanted to mention while Brian was talking about, I was just looking at Binance Coin and this massive dump because of the SEC. But let's focus on Bitcoin for the time being. I just wanted to show that while there has definitely been some, let's say, interesting activity in terms of Bitcoin large whales, especially this 1,000 to 10,000 group. One thing that needs to be mentioned here is that we have seen almost the exact opposite pattern in the balance of addresses that are holding between 100 and 1,000 Bitcoin. So here you're looking at the actual total amount of BTC that is held by these two groups of addresses. So this is the total amount of Bitcoin as percentage of Bitcoin's total supply, held by addresses holding between 100 and 1,000 BTC. So they currently hold about 20% of Bitcoin's total supply, while these addresses, 1,000 to 10,000 BTC, hold about 28% of Bitcoin's total supply. So as you can see, as the amount of Bitcoin held by these 1K plus Bitcoin addresses started to decline, almost instantaneously or simultaneously, we saw a spike in the amount of Bitcoin held by 100 to 1,000 range addresses. So when you merge these two groups together, what you get is a fairly different picture. So in general, it seems like the total amount of Bitcoin held by these two groups of addresses combined is in an uptrend. Now, currently, it's kind of starting to waver a little bit last couple of days, but overall, it seems like they have bought the dip, right? So my theory, at least for now, is that there might be some sort of, I don't have proof of this, so take it with a grain of salt. I'm still looking into different ways of sort of validating this theory, but my theory is that there has been some internal reshuffling among large Bitcoin holders, whether that's Grayscale, whether that's just maybe exchange wallets moving their coins to different cold storage wallets, and this is potentially why we are seeing this massive sort of difference in the amount of Bitcoin held by these two groups, and why they seem to be moving into unison. So it's not that necessarily whales are dumping Bitcoin. It could simply be that whales are rearranging their holdings into a bunch of smaller wallets, right? Which might make it also more difficult to track. So this is because of the sort of similar patterns of these two groups, basically completely mirroring one another. I think this could be a possibility, right? So with that, let's segue into two things. Number one, if you have any questions, guys, about specific coins that you want us to take a look into. So I know BNB might be on somebody's mind because, the SEC drama today, and it seems like already I've been looking into it before the call. It seems like there are a few interesting metrics. So if you want us to look into specific coins while we're on the call, let us know. I've seen Solana in chat. I've seen ADA and MATIC. We can definitely take a look at some of those. If you have other suggestions, let us know. Before we get into like impromptu analysis of the coins that you're interested in, I also wanted to shill SanR. So we are slowly starting to roll out a new feature of our platform, which we are very excited about, and I would very much enjoy it if you guys would take it for a spin. So SanR is sort of a decentralized marketplace for price prediction signals. So that might sound like a mouthful, so let's break down what that actually means. So as you can see here, by the way, you can still see my screen, right, Brian?
Yep, all looks good.
Okay, so the idea of the platform is pretty simple. When you have an idea about where the market is headed next, you can simply go to SanR, you can connect your MetaMask, which I've already done. You can see my address here. And you can create a prediction signal. Like, for example, you can say that based on, the bearish sentiment that we're seeing for Bitcoin, I believe that Bitcoin is going to rise from this point on. It's going to increase in price. And you can set up some advanced features here like target price, stop loss, things like that. So your prediction, because this is sort of a decentralized marketplace, your prediction will get recorded on the blockchain as an NFT. So that might be, exciting for some people because NFTs are all the rage these days. But they get recorded on the Ethereum blockchain as an NFT, and they basically act as an immutable proof of your sense of where the market is headed, right? So there are several reasons why you would want to make a prediction on SanR. Number one is simply to kind of compete with other traders. So you can see leaderboards here, and you can test your market sense and test your accuracy about where the markets are headed against me, other people in the sentiment team, and other early adopters in the sentiment community. So if you really want to kind of, figure out exactly how well you think you know the market and whether, your sense of the market is better or worse than other traders, I think this is a very good sort of exercise for you to try. Number two thing that you can do is you can actually stake SAN and then enter this forecast in a reward program. So I've already done this. As you can see, this is this was a forecast or prediction that I've made actually last week during this call while I was demonstrating SanR. I staked predictions. I said that Bitcoin is going to go up. Currently, I'm up 18% on my prediction. There's 7 days until the next reward cycle. So when you stake SAN for your prediction, you get entered into a reward pool. So if you outdo other people, if your market sense is better than other people that are currently playing and predicting where the market is headed, you get rewarded with a portion of the entire pool, right? So the third thing is that if you're not really confident about whether the market is going up or down, you're not really sure, but you want to hear what other people are saying, I still think SanR is a pretty good website to check out because here you're going to see what other people think about the market, which again, this is all stored on the blockchain. So, it's sort of an immutable proof of their reputation. You can check out how other people are performing, what they think of the market. And if you find people that you believe are, have proven that they know how the market works, that, based on their previous predictions, they have been very successful in predicting future market moves, you can follow them. Right? And you can essentially use SanR as a decentralized copy trading platform. So let's say I believe that Balraj, based on his previous performances, seems like he's doing pretty well for himself. Even the sort of performances that, pretty much I think each of these has, he's pretty much nailed each of these, mostly Ethereum and Bitcoin. He's currently up 74% based on his performances, based on his last 7 forecasts. I think, I believe that he's done a very good job in predicting the market. I can follow them. 50 cents is required to follow a user. If you want, obviously, you can set up your account and follow a user. And then what you're going to get is you are going to be able to see the next time that Balraj opens a signal. And then based on that, if you believe that Balraj was and is a very good sort of very good at predicting future market moves, you might want to copy trade. Or on the other hand, if you find a person that is very bad and sucks at predicting the market, you might want to counter trade him. It really goes both ways. So anyway, in the future, we want to make SanR completely decentralized. We want to allow people to monetize their market knowledge. So in the future, our idea is to actually allow you, after you've kind of gained reputation for your predictions, allow you to mint NFT subscriptions to your signals. So for example, if you want to sell access to your signals, you can mint them as NFTs and you can sell them on the open market, so that when people want to copy trade you, essentially, or if you want to copy trade somebody else, you can purchase these NFTs as keys to their signals, which I think is pretty cool. And it's all going to be done in a decentralized fashion. You can read about that in our developers and FAQ boards. So anyway, the platform is still in beta. I would, it's still, sort of currently used by the Sentiment team and some community members. So I would really enjoy it if you guys would, if you guys like something like this, try it out. Let's test your market intelligence against me and against other people in the team, and let's see next week how we both fare, right? So it's very simple. Let me show you. If you don't want to stake SAN to enter our reward program, you can still compete. Let's say that currently, because of the sort of bearish sentiment that we've seen about Bitcoin, I believe that Bitcoin is going to keep rising. I simply select Bitcoin. I say, okay, I believe that it's going to rise. I'm not even going to set a target price or stop loss. That's how confident I am. And I'm going to open a forecast. Forecast has been opened successfully. And there we go. I have another forecast open here. This is not entering a reward pool. This one is. So hopefully, Bitcoin, for my sake, continues to rise, because currently I'm doing pretty good for myself. So anyway, sanr.sentiment.net. Check it out. The link is also in the description of the video. Play against me, trade against Brian, me, and other people in the Sentiment team, and let's see who gets the better end of each other at the end of next week, right? So that's gonna do it for my end, Brian. Let's see if you have anything else to add. Go ahead, and then we can go into audience questions. So let me stop sharing this screen.
And before we end, you can end your screen, that's fine. But someone, James asked if there are any crazy high interaction fees when it comes to using SanR. Do you want to let him know about the fee aspect?
Sure. Max, are you there as well? Is Maxim on the call?
Yes. I just answering in the chat. Yeah.
Okay.
Sorry, what was the question?
So the question is, are there any crazy fees with interacting with the SanR as a platform right now?
Yeah, I can repeat because I wrote them. No fees because you just sign your transactions. But of course, when you deposit or withdraw SANs, as we interact with the network, so you will have to pay fees. And NFTs as a signal. So later on, if you grow and create your subscriptions, we store at the moment on a sidechain. We use Coven, and we will use our once we finally launch our layer 2, it will be stored on our source. There will be no additional fees for this. But to move in and move out, there will always be fee because it has to be stored on the mainnet. Otherwise, how can you make sure that suddenly SAN balances are not exploding? It has to be verified by blockchain. But I think we actually reimbursed or refunded first deposits.
Yep.
And maybe actually we wanted to sunset, but I think we'll keep refunding. So whenever you deposit, we will refund your transaction fees. So
exactly. So just let us know in Discord.
Yeah. I think it's a kind of more or less standard between our projects as we are staying upfront for these crazy fees. And well, we as a team who did that, so we do have some money, so we can refund it for the time being.
So
yeah.
So just let us know, guys, if you are actually staking SAN to enter a reward pool, let us know in Discord, and we'll refund your sort of gas fee for the first time. Somebody is asking, is there any minimum SAN staking? I believe that for a signal, there's a minimum of just 5 SAN, right, Max, to enter a forecast?
Yeah. I was about. I'm writing exactly this answer, but okay, I will say it now, and I will write it down. If you want to participate in this 2 weeks epoch competitions, 5 SANs for each signals you need to stake. And then if you want to follow someone else, at the moment it's 50. So typically I suggest, well, deposit 500. More than 1,000 probably you don't need. At the moment, yeah. At the moment we start growing, and then if we will ever get hype with this NFT and people will start booking subscriptions to some smart providers, once we get more in them, then you will need more. But let us grow for there. I would say for the moment, if you just want to make predictions, 100 is obviously enough. If you want to follow someone else, maybe 500, around these numbers.
Yeah, and who knows? I mean, I never thought that I would be into NFTs, and I was just bidding on a tweet before the call. So, it's a crazy market, honestly.
Yeah. And this is a real, actually, digital value. Once you can establish it and proves that 70 to 80%, for instance. There are different ways how you, with your analytics, you give a value. Yeah.
Right.
And one direct way, yeah, you like just making right calls. But there is a very interesting case, even in a case, even when you do wrong calls, but you do it constantly, it has immense value. Yeah, just keep doing it because some other people will be able to do money out of it. So the value of it's subtle, but we had this ideology since quite a few years. The value of the moment you start placing down your emotional state, yeah, the two things will happen. One, after some time, because you reflect, you see visually how you reacted, yeah, and what was the outcome. There will be your mind adopt, your brain adopt to possible level of your emotional control, and you will not be doing terrible calls. I mean, like random calls. So you will start doing repetitive things, which is part of your, let's call it psychological trait DNA, which cannot be changed so easily. So you will keep doing it. And actually, here's the most interesting part. At this stage, it doesn't matter if your calls are good or bad. It's the most important consistency. Yeah? So once you come to consistent state, it has great value. So subscriptions to you will have great value because some people, I know for myself, I'm very good in spotting tops. I'm a bit early for finding bottoms and all the stuff like this. And it's like, keep repeating. I'm doing it for 3 or 4 years and always the same, nothing changes. And I know my value, so I know approximately how to deal with it, but I still store it on here on a platform, and it's very interesting to see. So I know when, for instance, for myself also to trade, when not to trade. And if I do it frequently, because I don't do it frequently, I have many other things to do, then it can be even like inside the day. The way your brain or mind react to events in the outside world is always the same. You always, all of us have deep line roots or pattern how we react to reality. And it's like, well, if you meditate or do intensive spiritual discipline, it changes slowly, but basically stays the same. And this platform lets you visualize it. This kind of psychological DNA.
I love James's comment. Says, imagine if you found out you always called it wrong, so you started betting against your own analysis.
Yes.
Honestly, man, I've been there. A few times I was like, I think that Bitcoin is actually going to correct from here, so it's probably going to go up. And I was right. Sometimes you need to know your own biases and how you interact with the market from them. So. Okay. Thanks, Max.
Yes.
Guys, check out SanR.sentiment.net. Let's, you saw my prediction, and I'll probably make a prediction, a few more predictions in the meantime about BNB and maybe even a few coins that you tell me about today. So let's see who wins at the end of next week. All right, Brian, you're sharing your screen already, right? Let's go into your screener, your template, and then I already see a bunch of questions about specific coins, so we can jump right into them.
You bet. Yeah, thanks for the clarification on SanR, guys. Like most things, practice makes perfect. And what's great about it is the fact that you're going to have all of your predictions recorded, and you can always reflect back and look at, how you bet and learn and get better and better. And as even Maxim said, there's always room for improvement through doing that type of analysis on SanR. So I definitely encourage you guys to check it out. 5 San is just a little over $1 right now. So not a lot of barrier to entry. Anyone can really get in at the minimum expected value to participate. All right, so we're looking at a really rapid fire look at some of our recent SAN Sheets models that we've introduced to our community, beginning with the daily active deposits versus non-deposit active addresses SAN Sheets model. And what this essentially does is look at big spikes for about 40 different crypto assets. We can look at when there were the largest active deposit spikes, the top 3 for each of these respective assets. We can look at the previous day here. Scale has had a huge spike, as you might expect. It doubled in price over the last 24 hours, thanks to a Coinbase listing. We also had MATIC and Ocean with big active deposit spikes. Typically, this is a sign of, a lot of coins moving to exchanges with the purpose of being sold. And with the, looking at scale in particular, that's going to be a little misleading because Coinbase, there's still a few kinks to iron out in terms of how much we're tracking exchange inflow and active deposits onto that particular platform. But what I like to look at here is the active deposits ratio. And what this is essentially doing is...
Sorry, for a few people that might not be familiar with the concept of deposits, can you just explain what deposit addresses actually are?
Deposit addresses are essentially addresses that we've marked as exchange addresses, and whenever we see tokens being moved onto those addresses, it's marked as an active deposit address.
Yeah, so it's basically addresses that once you send coins to an exchange, they don't go directly to a cold or hot storage, but first they need to pass through that deposit address. So the only reason why these addresses exist is to funnel coins to exchanges. So when you see, for example, spikes in daily deposits, that's why sometimes when they happen during price pumps, they seem to suggest that a lot of people are moving their coins to sell, and it could be a signal that we are going to, experience a short-term price correction, right?
Yep, exactly. Thanks for that explanation, Dino. And looking at the active deposits, it can be misleading at times. And why I have this chart here is exactly for that reason of trying to clear up some of that misleading information, because this is actually measuring what the active deposits are looking like versus the overall address activity. Sometimes there may just be a lot of overall address activity, but it's coming with a lot of them being active deposits. And what the blue line are those actual deposits divided by overall address activity. Address activity, of course, is just the overall amount of addresses that are interacting in any way on the network, whether that's a deposit, withdrawal, simple trade, etc., whether it's an exchange address or not.
Right. So is the theory that sorry for addresses are deposit addresses. So there's quite a substantial spike in sell side pressure, and therefore we might be careful of what's going to happen next. Whereas if there's 1,000 addresses but only 20 of those are sending money to exchanges, it seems to suggest that the coin is being utilized mostly for whatever is purported utility and not actually being used to get out of the market for the time being.
Yep, I couldn't have said it better myself. That's exactly right. So essentially, when the red bar, the 90-day average, is well above what the blue bar is showing, which is just the previous day's average, that means that the previous day is showing a much lower ratio of actual active deposits, meaning it's showing a higher propensity for healthy utility compared to its usual average. And that's, of course, the case that we saw with Scale. Like I said, again, with a lot of the movement happening with Coinbase and it being very fresh, that can still be very misleading. But big rule of thumb that still needs to be back tested. So we want to really put our money where our mouth is on this and prove that this theory is correct. But at least what I've seen so far, when a blue bar is significantly below the 90-day average, it's generally a good sign of increased utility and decreased risk of major sell-offs occurring. Because
it means that it means one of two things. It either means that the amount of activity on the network has remained the same, but the amount of daily deposits has really tanked, basically declined several percentage points or double percentage points. And then the other possibility is that the general amount of activity on the network has increased, but the increase in usual normal addresses is higher than the increase in daily deposits. So in either case, on average, the network is largely being used for whatever its supposed purpose, rather than speculators looking to sell off and get out of the market.
Yep, exactly right. So I don't want to spend too much time on this chart because I want to show a few others. But long story short, this is one of several that we have for our Sanbase Pro members. As long as you have a Pro API, which everyone receives upon getting a Sanbase Pro subscription, you will be able to simply plug it in by going to add-on, SandSheets, and plugging in your API key here. Once you do that, all you do is make a copy of the main link that you can see clearly in the URL, and we have a full list of them on our website. Just make a copy, plug in your API, and everything will show up on your personal copy, where you can actually go in, and even if you wanted to, you could switch up whatever assets you wanted to display in any order you wanted. So it's fully customizable. You can do it any way you want, and we're available on Discord to answer questions about all of these. Next one I'm going to really briefly touch on is our exchange inflow and outflow SanSheets model. And this was introduced a couple weeks ago. There was an article written about it by me. And what it essentially does is measure the outlier days basically over the previous one day, whether the inflow is above or below its usual average. In this case, since it's inflow, when it's above its average, that's a bearish signal, which is why they're being painted in red here. The higher it is, the more of an outlier there is in exchange inflow, and the more of a risk there is based on the current price. So of course, scale right now is off of the axis because it's been going through such a heavy amount of circulation with the price doubling and it being introduced on Coinbase and a lot of polarization being around it. But if we look at the outflow chart, where you'll see the green and red inversed, the green is also off the chart for scale, right? Because there's just so much inflow and outflow going on right now in both respects. So that's interesting to see. But usually when you're not going through a 2x day like scale just was, you'll see some more skew in one direction that gives you some great information on whether a coin is seeing an increased or decreased risk based on the amount of tokens moving away or onto exchanges. We also have this spikes chart, just like I showed you on the other model, to see the top 3 inflows and outflows over the last 90 days for every respective coin. And that can give you a nice quick gauge as to which assets to be keeping a close eye on from this group of about 40. Finally, we've got our exchange percent of supply spreadsheet, which is showing the top 10 overall, what the top 10 whales for any respective asset are doing in terms of moving on or off exchanges. For example, this big green one here shows that Bancor is actually having a lot of whales moving on to exchanges as of late, which is why it's in the red territory painted here. You can also see just the on-exchange addresses or just the off-exchange addresses. You can also look at just the overall, and this is probably the one I look at the most right here. This is just the overall supply and whether it's moving more onto exchanges or off exchanges in terms of percent change over the past year. And so you can really take a look at like which lines are moving up or down. Gnosis, for example, is moving more and more onto exchanges right now with its supply, whereas interesting, Tether is moving more and more off exchanges, which is actually a bit of a concern, right? Because Tether's the one asset here where you want to see more moving on to exchanges. So that's probably a bit of a bearish signal there, just from this standpoint. I find this to be very interesting. You can even look at the infographic that shows what the 1 day, 7 day, and 90-day percent changes from just a column, stacked column perspective to give a quick snapshot for your favorite assets. And then, of course, we have our whale holders distribution model. I'm still getting this up to speed for public use because it requires a lot of loading and it needs to load in under 6 minutes or else errors occur. So I'll have this version up soon. You can see it's refreshing now, but it basically shows the 1 day, 7 day, and 90-day percent change in the amount of whale addresses, whether that be 1 million or above for the really small coins in terms of tokens held, or just like 100 or above for something like Wi-Fi that is almost as large as Bitcoin in terms of price right now. So this is one of my favorites. All of these SanSheets models, plus about 6 or 7 others, are available on our website for you guys to freely copy with your SanSheets API key and use and check in real time. So I highly encourage it. And I'll be happy to answer questions along with our other staff members on Discord. So make sure to jump in and check these out. That being said, I want us to spend the rest of the time going over various assets that you guys are requesting. Yep. I can do the first one, or you can jump right in if you want, Dino.
Sure, let me share my screen. I've already seen asking about Link, and I saw MATIC, so we can start with those two. let's see what other. Yeah, I saw BNB forecast. I saw Cardano. So for Cardano, for the time being, we don't have on-chain data for. We do have social data and development activity data, some interesting things that we might want to look into. But I'll start by focusing on ERC20 coins because our coverage is definitely the greatest for Bitcoin, Ethereum, ERC20 coins, XRP, top caps, and the Ethereum blockchain in general. So Chainlink, let's start with some Chainlink analysis. I saw a few people ask about Chainlink in general and then looking at Link Marine Wallet, so we can do that as well. All right, first of all, Brian, can you see my screen so that I'm not just talking? Okay.
Yep, everything is good.
Good. All right, so let's start with general on-chain activity for Chainlink. Because Chainlink, for those of you that don't know, Chainlink is generally one of the most actively used ERC20 coins, period, right? So for example, if we look at the let's take last year of data. So these are the active addresses, basically the amount of unique addresses that are sending or receiving Chainlink on a daily basis. So you can kind of see where we were during the DeFi summer, where Chainlink peaked, and then we kind of had a period of consolidation in terms of the total activity. And then since then, Chainlink has been once again, the trend is up. That's all that needs to be said. At the moment, we have around 10,000 addresses interacting with Link. That easily puts it in the top 5 assets on the Ethereum blockchain, easily. So, even though we're currently going to look into like very short-term possible predictions and what Chainlink might do, in general, Link is looking like a very popular asset. I don't think that, sort of a massive, especially if it kind of experiences a massive correction, I would be even more bullish on it, right? Because as far as what coins are being utilized on the Ethereum blockchain, in terms of active addresses and in terms of transaction volume, Link is always up there, like one of the most utilized coins. And we see some very big spikes in transaction volume today. Wonder what that is about. We can maybe try to answer it, but it will take a little bit more time to figure it out. All right, let's start with figuring out where is Chainlink currently in terms of sell-side pressure, right? So for this, I like to use 2 main metrics. This is daily active deposits and exchange inflow. So like Brian mentioned a minute ago, daily active deposits essentially show the amount of deposit addresses that are on a daily basis used to funnel Chainlink to exchanges, right? So the idea is that the higher the amount of deposits, that more people are, using the blockchain to move Chainlink to exchanges, presumably to sell. Why is the Chainlink price having issues? One sec. Maybe if yeah, there we go. Okay, so this is what we've seen last year during the DeFi summer, right? There was a massive spike in the daily deposits for Chainlink for a while there before we finally had a correction. So this is sort of what when you see these massive rises and upticks in deposit activity, it does suggest that more and more holders are looking to offload some of their bags. Currently, Chainlink is we've had a spike on March 3rd around this local price stop. We had a little bit of an uptick around before this correction, but in general, this seems to have been the latest or the most recent time where people were, on average, more interested in selling Chainlink than usual, right? In the last 7 to 10 days, there hasn't really been any uptick in Chainlink deposit activity, suggesting that, most people compared to previous couple of months are content with sitting on their bags. Looking at exchange inflow. Now, exchange inflow, on the other hand, does seem to suggest a little bit of an uptick in the last couple of days. So let's zoom in a little bit so we can see it. There we go. Okay, so especially today, there seems to be a bit of an uptick in Chainlink's exchange inflow. So that basically just means that the amount of Chainlink moving to exchanges is rising. Now, I always like to compare this with the exchange flow balance because this metric shows the difference between link in and link out of exchanges, right? So if you look at flow balance, it also suggests that there has been an uptick in Chainlink's, in the amount of Chainlink moving to exchanges. Let me zoom in to see exactly when it happened. It seems like it happened right around this correction today. Interestingly enough. What about exchange inflow? Yeah, there we go. Let me zoom in a little bit more just to see Yeah, it seems like it's been sort of well, not really a leading indicator, but it's definitely helped the correction here. There's been a steady inflow of Chainlink to exchanges. There's also been another sort of move down. Sorry, another sort of spike in exchange inflow here around the local bottom. So this is also something that you often see. And if I zoom in, you'll see it happen to Chainlink more recently as well. So spikes in exchange inflow, they're kind of they can work both ways, right? Like when you see them during price rallies, you see a spike in exchange inflow, it means potentially that a lot of people are moving to sell their coins, and there's unlikely to be a massive amount of buy side pressure on the other side, because people would have to be okay with buying Chainlink at a premium and absorbing this sell wall at a premium because Chainlink is pumping, right? But on the other hand, when the price of Chainlink is dumping, like here, for example, and you see these massive spikes in exchange inflow, it essentially means, number one, people are panicking. There's, holders are capitulating. There's a whole lot of FUD around the coin, which is oftentimes, not always, but can be a very interesting time to buy, right? And second of all, especially for a coin like Chainlink and Marines that are very active, these types of moves down, when you see this rise in sell side pressure, it's much more likely that there is going to be an opposite reaction or a big sort of buy the dip pressure, right? So because people will be more than happy to buy Chainlink here than, like, for example, buying it here because they're buying it at a discount. So it's more likely that this type of sell wall is going to be absorbed by bulls, whereas when you see a spike in exchange inflow maybe here, it's less likely to do so, right? So if I zoom into the last week and I see this type of spike right before the bounce back, this is what I think usually happens, right? Is I think some people are looking to sell, but there's a lot of money waiting on the other side of the table looking to buy into the dip. And therefore, the rising sell side pressure gets rejected, gets absorbed, and usually indicates a period of short-term price recovery for the coin. So I think in general, it's good to see every now and again, you see a little bit of pain, a little bit of people being fearful for the coin's future price performance. So, take that for what you want. In general, yeah, the last couple of days, basically last 24 hours, has seen a bit of an inflow in Chainlink to exchanges. So I think a short-term correction is probably, and it's already happened, so maybe it's already been priced in, but it's not surprising. And I think from that point on, it could provide a potential for a price recovery in the next coming days. Now let's see what long-term Chainlink holders are doing. Well, it's always tricky to track long-term holders for Chainlink because it has these. Let me show you. It has these sort of repetitive spikes in H consumed. So H consumed is a metric that tracks the amount of activity of previously dormant coins. So when you see spikes in H consumed, it means that a lot of long-term holders are moving Chainlink on the exchange, or moving Chainlink on the blockchain. So it could suggest upcoming price volatility, right? But because of these sort of constantly repetitive spikes, which I believe have to do something with Chainlink's general sort of Oracle system, it's not the best metric that we can look into. So instead, let's look into MVRV. If you follow these calls, it's one of my favorite metrics because it's very simple and people can understand what it means for the future potential of the coin. So MVRV shows the average profit or the average loss of a specific group of Chainlink holders. So currently we're looking at the 30-day MVRV for Chainlink, which basically tracks the average profit or loss of all addresses that have acquired Chainlink in the previous 30 days. Currently, they're on average down minus 1.7% on their initial investment. So they're actually below break even, short-term Chainlink holders on their initial investment, right? Now, the idea behind MVRV and how on-chain analysts use it is that the higher the MVRV of a particular group of holders, the greater the unclaimed profits. So basically it means, for example, here, right? MVRV was about 61%. So it means that on average, short-term Chainlink holders were about plus 60% on their initial investment. So there's a lot of money sitting on the table waiting to be claimed. So the higher the MVRV, the greater the unclaimed profits, and therefore the bigger the risk that short-term holders in this case are going to start taking those profits and applying negative downward price pressure, right? They're going to be selling parts of their bags, reducing their exposure, which is going to have a negative impact on the price of the coin. So in general, the way on-chain analysts use this metric is high equals bad or overvalued, low equals good or undervalued. Obviously, this is oversimplification. You should definitely not, look at it as simply as that. But currently, we are seeing that the Chainlink's 30-day MVRV is below break even. So this means that on average, I don't think there's a lot of incentive to sell. Because currently you're kind of just minus 1% on your initial investment. And the lower that we get, in general, on-chain analysts believe that the more undervalued the coin is, right? So for example, you can see previously that MVRV tends to kind of peak between, let's say, 30 and 50%. So when it enters this sort of zone, it usually suggests that a short-term correction might be incoming because MVRV needs to normalize and people need to take some profits, which is normal, right? And then as you see here, these levels of between like 13%, maybe 15% down to all the way to like during a correction 35%. But especially like the last couple of bottoms seem to have been around the same level of about minus 15%, where you see, okay, this seems to be a potential sort of support level in terms of MVRV, where when holders are minus 15% on their initial investment, it usually suggests that the coin is sufficiently undervalued for its price to experience a recovery. Currently, we're about minus 1%, which I think is like, at the very least, it allows Chainlink's price to move forward, upward before we enter this sort of overvalued range, right? So this is as far as the Chainlink's 30-day MVRV is concerned. Let's look at what the long-term MVRV looks like. So this is the average profit of all Chainlink addresses that have acquired a link in the past 365 days. So they are currently about plus 65% on their initial investment. So they're still in the money quite a lot, actually. But looking at historical trends, they're nowhere near the previous price peaks, right? So I think this was at about 160%. This was plus 200% before they really started taking profit and applying important or significant sell side pressure. So currently, I think both long-term and short-term MVRV is relatively low. It can go lower, like ideally, like I say, I would like to see a 30-day MVRV drop to somewhere around here, around minus 15%, to be very sort of positive about the coin's future price performance, because it seems very undervalued, especially if other fundamentals suggest that we, are in a sort of fertile ground for price recovery. But it's looking fine. It's looking like it can definitely grow from here in terms of on-chain data, at least. So we're already 5 minutes past the hour. So let me look at one other coin before we go. I saw. Can we do Solana instead of BNB? Sure, we can look at Solana really quickly, just like because we don't have on-chain data for it anyway. So we can't currently look into. Oh, I forgot to look into whales for Chainlink. Give me 1 second. I'll get back to it. So for Solana, we can look into development activity, social volume and social activity, and general, financial information. So I mean, to start with, I think in general, development activity for Solana is among the highest out there. So 89, for example, I think the average for ERC20 coins. The average development activity among the top 10 ERC20 coins in the past month was about 30. So the fact that, Solana is definitely a project that is being very actively worked on. And, there's quite a bit of an investment in coding manpower. So what development activity does is it calculates the sort of activity in the public repositories of these projects, GitHub repositories. So we try to track the total amount of developer effort into a project. So let's look at social volume just to figure out where we are. All right, cool. This is always a cool chart. Let me zoom in a little bit. All right, so as you can see, this is something that we see quite often. So this is the social volume, or the amount of mentions for Solana, and obviously this kind of just puts everything else dwarfs everything else. So we've seen a massive spike in the amount of mentions of Solana on crypto social media around its local, or I think it was this all-time high, around its previous price top anyway. So this is what we often see. We've even backtested this phenomenon where we looked at the price performance of coins before and after they experienced this massive spike in social volume. And it seems to be a pattern where I think our backtest showed that in the 20 days after a coin experiences a massive spike in its social volume, its price tends to drop by an average of 10%, 10.9%. And this was on a sample size of about 650 different coins. So Gary, if you want to link to that article that people can take a look for themselves. This is why I'm never surprised when I see these massive spikes in social volume and immediately you see a correction. So for example, in the Decentraland, I wrote about it recently. I think there was pretty much the same thing. Yeah, there you go. Spike around the local top here, spike around the local top here, and then another spike before this current correction. So, and you can see it happening around the smaller tops as well. So looking back into Solana, we can zoom in a little bit. It seems like, on a sort of a bi-weekly scale, there doesn't seem to be a whole lot of increased chatter. And this is what you want to see. You don't want to see too much chatter about the coin. You want it to be sort of flying under the radar, because once people get hyper aware about the rally, pretty much everybody that wanted to buy into the coin has bought into the coin. And that's usually, the moment of peak hype, when everybody is super bullish, and therefore there's not going to be a whole lot of additional buy side pressure, and whales are going to start dumping on you. So it's not a great time to buy, usually, at least according to our backtests, right? So that's sort of very quick Solana analysis there. So I wanted to show just for a moment, because I know somebody asked about Link Marine wallets. Here's a cool thing that I've noticed. It seems like there's a number of groups of Chainlink holders, sort of like mid-sized holders here, between 10 and 100,000. Obviously, this is quite a range, given the current price action of or price point for Chainlink. But all of these groups have kind of increased their holdings in the past 2 days. So it seems like they're sort of buying into the dip. Once again, completely on brand for Chainlink Marines. Anytime that you can stock up on Link during the sort of dip scenario, I think a lot of people take that opportunity. They're not always right, but it's something that you see quite often. So it also seems like, at least according to this, now I'm not getting too deep into exactly figuring out what these moves mean. I would need about an hour to do so. But it seems like sort of mid-sized addresses for Chainlink are starting to accumulate more Link, right? They're starting to add more Link to their balances, which could suggest accumulation, could suggest dip buying, and therefore, a potential for price appreciation. Obviously, nothing is for sure, and it can, change like this, especially since we've seen spikes in exchange inflow for Chainlink today. So a short-term correction is, likely, but on the other hand, Chainlink Marines do seem to be buying into this latest dip, which is good to see. All right. I think we saw one other thing. I want to look at MATIC before we go. That was, I think, one of the first coins that somebody mentioned. And okay, I already have social volume plugged in. So you can see once again this massive spike in MATIC social volume as the price started to rise, and since then it's kind of gotten choppy. So it usually indicates the beginning of the end for its price rally in the short term, right? Now let's see in general what MATIC's on-chain activity looks like, because I think it looks like crazy. All right, yeah. So for example, when you look at daily deposits for MATIC, last couple of days it's been just a pump in the amount of addresses that are moving MATIC to exchanges. And you can see pretty much the same thing. Let me change the color so you can see it more clearly. Maybe, there we go. Same thing around previous MATIC tops. So we saw it here, the smaller one, saw it here before the correction, saw it here before the correction. So I'm not surprised that MATIC is already starting to experience a bit of a choppy action. By the way, this metric currently only shows it gets updated on a daily basis, but we are working on adding a lower latency to the metric so that you can look at daily deposits for like on an hourly scale, which I think is going to make this metric that much more badass, right? So currently, there's quite a bit of sell-side pressure for MATIC, which isn't ideal for its short-term price action. Basically, I think usually what it means is that there's a increased risk of a short-term correction, but it doesn't necessarily mean that it's the end of the cycle for MATIC. It can already it can experience another leg up in the 5 days afterwards, right? If you look at exchange inflow, it's pretty much the same thing. There's a huge spike in the amount of MATIC being moved to exchanges in the last couple of days, which suggests that for the time being is with this metric. It's called network realized profit or loss. So what this metric does is it tries to calculate the total ROI of all network transactions on a daily basis. So the way it works is you take, for example, let's say that there was a MATIC coin that was last moved on the blockchain here. So we take the price at which it was last moved, and we assume that this is its buy price, its acquisition price. And then the next time it moves on the blockchain, let's say it moves here, we take the price at which it's moved the next time, and we assume that it is its sell price. So, the price at which you're basically taking profits. And then we take, the difference between those two prices, and we sum it up for all of the transactions on the blockchain to give you this metric, which basically the spikes in the metric suggest that on average, all of the coins that are being moved on the blockchain at this point in time are doing so at a significant profit, which suggests, an extensive profit-taking sort of operation here, right? So that's why if you look at the last 3 months, you will see sort of, several of these spikes around local tops here, here, and here, here as well. And then we saw the biggest one so far, I think in the last, 36 hours or so. So people are definitely starting to take profits. That's why I wouldn't be super surprised to see MATIC dump a little bit more. But it's the bull market. Sometimes in the bull market, especially when a coin is hype, as MATIC is currently, sometimes it just takes time for fundamentals to catch up with the coin, right? So keep that in mind. Overall, I personally wouldn't necessarily look into buying MATIC at this point in time, because it seems like there's a lot of money being moved, a lot of MATIC being moved to exchanges rather than from exchanges. There's a lot of people seemingly taking profit. And if you look at its MVRV, I assume, yes, that it's quite high as well. So it suggests that we are sort of in the overvalued territory. Currently, the short-term MATIC holders are about plus 70% on their initial investment. You can kind of see where we peaked previously. We're not near the February peak, but we're definitely sort of in the overvalued zone. And usually these levels of MVRV suggest that the price rally has become a little bit unsustainable and it needs to chill out for a minute so the metrics can normalize and before it can start pumping again. So these are going to be some of the things, guys, that I think this is where we end. If you want to learn more about how to use these metrics, and if you want to try them for yourself, check out app.sentiment.net. Everything that we've shown you here today, all of the metrics, all of the templates are available. If you don't have a Sanbase Pro account already, sign up and you'll get a 2-week free trial for all of the metrics on our platform. And after that, it's just $49 for the first month, which I think is the most sort of affordable on-chain platform, I believe, on the market. And so we definitely think it's worth the money, especially during the bull market. So give it a spin. Let us know what you think. And check out the link in the description of the video to next week's webinar. So if you care about whales in particular, we're going to be spending an entire hour, maybe even more, because we'll be answering questions as well, talking only about whale metrics and how to find large addresses that might be interesting in terms of how they impact the market with Sanbase. So that's going to be next Wednesday. And until then, Brian, any last words before we close it off for today?
No last words for me. I appreciate everyone on the call. As always, we appreciate the support so much, and we look forward to seeing you all here back next week for some more updates.
All right, so there's a question for BH asking, is there a discount code for viewers? There is. Thank you for reminding me, BH. So if you go, Max, can you flash it on the screen while I talk? So there's a 25% off discount code for everybody that's watching these videos. If you type in TWIC during checkout, which stands for This Week in Crypto, the name of this call, you'll get 25% off your first billing cycle. That's the first billing cycle. It can be either a monthly or a yearly plan. Whatever you decide, you get 25% off, which I think it makes the deal even sweeter. So thanks for letting me know or reminding me, BH. Yeah, if you like this type of stuff, I think, you know, fundamental metrics are gaining ground very quickly, and they're becoming more and more important in this bull cycle to figure out, you know, whether we're at risk at a short-term correction like we saw for Bitcoin and a lot of these, you know, NFT and layer 2 solutions. I think these can help. So check them out, and talk to you on Wednesday. In 5 days, let's get together and talk about whales a lot. All right. Thanks, guys. Talk to you soon.
Take care, guys. Talk soon.